How's it going, guys? It's Tuesday, September 3rd, 9 p.m. over here with Texas Standard Time, and I want to give you guys an update. It's been a bit of a hot minute since I'm at last minute video update. But let's dive right in. So, just catching up on market feed and everything going on with the markets right now. As we saw, there's a big pullback in the underlying mother of all products, the S&P 500. Right, for U.S. markets at least, and honestly, arguably globally. This thing drives volatility across many different sectors and indices, not just in the United States, but internationally as well. Why? Because there's a lot of money, large stakeholders internationally in the S&P 500, not just domestically. Right? Just to reiterate how to systematically view these types of things, the S&P 500 is a list of the sort of like running like 500 top companies in the United States. It's a conglomerate ETF that gets you a little bit of a piece of share in the pie for all these different companies listed in this heat map. Once again, what program are you using to trade? It's Thinkorswim with now Charles Schwab, because TD Ameritrade has merged with them. They're bought out and stuff. So yeah. So as you saw today, there's like a 2% pullback. Don't mind the background noise. This is just my buddies on Discord right now. But there's a 2% pullback in the S&P 500 today. If you look at the heat map, a lot of it came from NVDA, which dropped over 9% today. Now, why is this happening? Well, if you live in the United States, you probably already know that there's an election coming up. This Friday, there's going to be a big jobs report number coming out too. And, of course, the next Fed meeting is penciled in, I think, for September 13th, ? Let's see, next Fed meeting. September 17th to 18th. Okay, let's pull up that Fed Watch tool. All right, and let's see what the market's thinking. Which way the Fed itself is probably going to be leaning. Right. Let's see here. Fed Watch tool. How do I pull that up? Okay, here we go. This should be it. If it loads in, there we go. Alright, so for September 18th right now, the majority of people actually do think we might maintain the same rate, right? But quite a sizable amount also are predicting we might get a cut down to 4.75 points, right? Actually, no, wait, the current rate is 5.25 to 5.5%. So pretty much everybody's penciling in a cut of 25 basis points down to 5 to 5.25, right? So as you can see, if you click on the historical, where are we at? Dot plot. Let's see here. How do you interpret this again? Table. Current. I think this is what's going to show it. No? It's the current Fed market rate. Current Fed market rate. Yeah, there we go. 5.25 to 5.5%. Just wanted to run that and confirm it real quick. Hope not crazy. Okay, so right now the rate's 5.25% to 5.5%, and we're gonna, the market's pricing in either a 25 basis point cut or a 50 basis point cut down to 4.75 to 5. Okay. So what is that going to do with stocks overall? What do I think? Where are we going to head as a market? Well, that's hard to say. I mean, if you look at how things have kind of played out, and if you've been keeping up with, market news and stuff like that, we've been having fantastic earnings from the tech side, but everything else in the market's been kind of in a slump, right? I'm talking about things like, consumer type products. So you can look at that under the ETF, the breakdown. What is it? XLV? No, it's healthcare. XLY. That's the consumer side, okay? It's been kind of going sideways for the past year, okay? Arguably even downwards. I mean, overall upwards, but sideways in comparison to stuff like the tech, which is XLK, which is the tech sector breakdown of the S&P 500, okay? So, when you get a rate cut, usually companies that borrow a lot of money, they tend to prosper the most. when you get a rate hike, companies that tend to borrow the most suffer the most unless they have earnings to prove for it, which in this case, our tech side has had the earnings to prove for it, right? Such as the market leader for the past year, which is NVDA. Okay? So, what am I doing right now? For my friends watching, this is not investment advice, but this is just what I do, just shooting the shit. Is I'm pretty hands off right now. I've downsized significantly what I own on my account. I'm actually shorting overall. I have a larger position shorting than going long. So this is kind of what my account looks like right now. So I put on a VIX short, right? Sorry, a long VIX futures trade this past weekend at market open. And that's doing pretty good. It's recouping a lot of my losses on my stock positions, which I've downsized tremendously. So like you can see NVIDIA, I'm only owning like a very small position in NVIDIA, SOXL, which is one of my favorite things to trade of all time. And then a meme stock DJT. What do I recommend? Well, not really recommend. What do I plan on doing? Is I'm looking for NVIDIA as sort of like a basis for when to buy, because this is the market leader, okay? This is what's been propping up the S&P 500 in conjunction with Microsoft and Apple for quite some time. I mean, that's nearly freaking 25% of this entire heat map. Let's not joke around here, right? If you include Google in the mix, then it is like 25% of the entire S&P 500. Okay? Well, beyond that, actually. So, NVIDIA is a great stock to keep track of, because when this swings, if it does swing, then you can probably expect the S&P 500 and everything to coattail, sort of ride that upwards as well on the swing up. Okay? So, things to pay attention for are the jobs report this Friday. If it comes in hot, meaning there's a lot of jobs being created, could be good, but it could also mean worse for inflation. Meaning that we may not even get a rate cut of 50 basis points, maybe 25 basis points. Jerome Powell is kind of sort of hinting at a basis cut this coming up on September 18th, but we'll see how it plays out. If the job markets report comes in horrible, meaning not enough jobs being added, that probably will mean inflation is cooling down, meaning that we probably will get a rate cut, okay, maybe up to 50 basis points. And if that does happen, what I anticipate is the market to go sideways, right? Maybe it swings down lower, maybe it comes up a little bit higher, but net is probably going to be sideways action, okay, for the foreseeable future until geopolitical tensions play out and the election in November plays out. Trump is favorable for the market. Kamala Harris, on the other hand, is the opposite. However, whoever wins between them can still swing this market wildly in one direction or another, and I would not want to gamble on that alone. So just, take that with a grain of salt, if you will, and just keep treading the water lightly. That's kind of what I'm doing. Okay? So real quick, what is a VIX future? A VIX future, well, the VIX in general is a volatility index. Okay? It's based on, it prices in the options pricing on the SPX. That's how it works, okay? And it's an excellent hedging strategy for your account, but you need to play it wisely. You can't just dive right into it if you don't know how it works. So if you look at the S&P 500, right, the big boy options, not the little boy options, the big boy options of the SPX, okay? It's based on the volatility. You can see the implied volatility is a little bit lower in the long term, higher in the short term. What does that mean? These percentages are higher, meaning that for the shorter term, the market is pricing in a larger swing, okay? Whether it's the upside or the downside. In the longer term, there's lower implied volatility, meaning that there's going to be more stability in the future. That's the market is pricing in right now, okay? I mean, hell, you jump all the way out to like early, mid-2025, the IV right now is 22.5%. Comparatively up here, it's like 28% for a 3-day contract, okay? That's a pretty big skew, okay? And when you compare the pricing, okay, of calls versus puts, you can also see that there's a hell of a lot more puts being traded right now, meaning that people are hedging, okay? People are hedging actively. The S&P just reached that near all-time high again, freaking August 30th, okay? and then it just swung to the downside hard as shit. Is it going to continue tomorrow? Maybe it bounces back a little bit, but I do predict it's going to be sideways to downwards. Might be wrong, but again, just tread the water lightly, fellas. Whoever's watching right now. I mean, NVIDIA's down another 3 points after hours. You can't ignore this shit. It's a big deal, okay? Because this is a market leader. Everybody and their mama has been trying to get in on this stock for the longest time this past year. So, look for it to come down to these support levels. That fib level right there outlined at 92, right? We saw a pretty nice bounce back on August 5th, early last month. It's swaying a right word, swaying all the way back to 128, increased freaking over 25% in a matter of a couple of weeks, right? If that happens again, maybe we swing back to the upside. But just, my recommendation is, what I'm doing is I'm dollar cost averaging on the way down, okay? If it comes down below 100 tomorrow or this week, I'll probably pick up another 10, 20 shares. Comes down below like 90, if it breaks that support level, falls lower, I'll keep averaging out. You know what I mean? Because this is for a long-term type idea that it is going to probably come back up to the upside. They just killed earnings the other week. Let's be real here, right? They're paying out dividends. They're killing earnings. They're the freaking market leader. All right? Now, you can probably do the same on stocks like Microsoft. I wouldn't really touch Amazon personally. It's a great company, but I like Microsoft more in terms of volatility. You can probably do the same thing on Meta. Probably, I wouldn't really do Netflix personally. That's just me. Or you can just go a little bit wider out and just invest in the XP tech sector in general, the XLK. Or, of course, just buy the SPY or your favorite Triple Q. All right? Thanks for tuning in. Hope you all have a great day.
Dr. Peanuts, bro. Yeah, we died too many This Rev. I'm not like